If you have a low credit score or a history of missed payments, getting approved for a personal loan might feel impossible. But here's the truth. Bad credit does not mean no options. In 2026, many U.S. lenders approve borrowers with poor or fair credit by looking beyond just a number. They may consider your income, employment history, and repayment behavior, not just your FICO score. In this guide, you'll learn what bad credit really means, how these loans work, the best lenders to consider, and smart strategies to increase your approval chances. Let's start with the basics. What is considered bad credit? In the United States, credit scores typically fall into these ranges: 300 to 579, poor; 580 to 669, fair; 670 to 739, good; 740 and above, excellent. Most lenders that specialize in bad credit loans work with borrowers who have scores between 500 and 640. So even if your score isn't perfect, you may still qualify. How bad credit personal loans work? Bad credit personal loans are usually unsecured installment loans, fixed monthly payment loans, higher interest rate loans due to risk, short to mid-term loans, usually 2 to 5 years. Many lenders now evaluate additional factors like stable income, job history, debt-to-income ratio, banking behavior. This means your financial habits can matter as much as your credit score. Are bad credit loans right for you? They may be a good option if you have a low score but steady income. You need emergency funds. You can afford monthly payments. They may not be a good idea if you're already heavily in debt. You don't have a repayment plan. Responsible borrowing is the key. Best personal loan lenders for bad credit, USA. Let's look at some of the top lenders known for approving borrowers with low or limited credit. Upstart, best overall. Upstart uses AI-driven approval models that consider education, income, and employment history. Best for borrowers with stable jobs but limited credit history. Avant, best for fast funding. Avant is known for quick approvals and simple online applications. Best for emergency expenses. OneMain Financial, best for very low scores. This lender may approve borrowers with scores below 580 and offers branch locations for in-person help. Best for people rejected elsewhere. LendingPoint, best for fair credit. LendingPoint focuses on your ability to repay rather than just your credit score. Best for rebuilding financial stability. NetCredit, best credit builder. NetCredit reports payments to credit bureaus, helping you rebuild your score over time. Best for improving credit history. Oportun, best for no credit history. Oportun may approve applicants without a strong credit record by evaluating income instead. Best for new borrowers or immigrants. Secured versus unsecured loans. Unsecured loans don't require collateral, but they're harder to qualify for and usually have higher rates. Secured loans require an asset, like a vehicle or savings account, but they may offer lower interest and easier approval. Just remember, if you default, you could lose the asset. Interest rates to expect. Most bad credit loans fall between 20% and 36% APR. Some lenders also charge origination fees. Shorter loan terms usually cost less overall, even if monthly payments are higher. Important warning. Avoid payday or title loans. These can exceed 300% APR and trap borrowers in debt cycles. Tips to increase approval chances. To improve your odds. Show proof of steady income. Lower existing debt balances. Use pre-qualification tools with soft credit checks. Choose lenders that report payments to credit bureaus. You can also apply with a co-signer if possible. How to improve credit after getting a loan. A loan can actually help rebuild your score if you manage it wisely. Make every payment on time. Keep balances low. Avoid rollovers or late fees. Refinance once your credit improves. Consistency is what builds credit. Common mistakes to avoid. Many borrowers make these costly mistakes: accepting payday loans, ignoring fees, choosing long terms with high interest, borrowing more than needed. Always calculate the total repayment amount, not just the monthly payment. Real example scenario. Let's say a borrower has credit score 590. Loan amount $8,000. April 24%. Term 36 months. Their monthly payment would be about $315. If they make every payment on time, their credit score could improve significantly within a year. Final thoughts. Having bad credit does not mean you're out of options. The right loan can help you cover emergencies, stabilize finances, and rebuild your credit profile. The key is choosing a legitimate lender, understanding the true cost, and borrowing only what you can comfortably repay. Used wisely, a bad credit loan can be a stepping stone, not a setback. Disclaimer: this content is for educational purposes only and does not constitute financial advice. Loan approval rates and terms depend on individual credit profiles and lender policies. Always review lender disclosures and consult a qualified financial professional before borrowing.